Anthony Todd of Aspect Capital. We are going to talk about trend following.
It actually covers a range of different approaches, so it's always difficult to generalize. But I think there are some common features shared by many trend followers. If I can just highlight three of those. The first is that typically trend followers will follow a very disciplined, systematic approach, so a completely automated, scientific approach, with the aim of identifying trends or momentum in markets over periods ranging from a few days to maybe several months. Medium-term trend followers will typically be looking to try to identify trends or momentum over a period of, say, 2 to 3 months or longer. That would be our definition. That was very much tie in with Aspect's definition of medium-term trend following. The second element is that trend followers, again, typically are highly diversified in terms of their approach. So we'll be trying to identify trends or momentum across multiple liquid markets spanning long-term bonds, short-term rates, currencies, stock indices, but also harder to access markets such as energies, metals, agriculturals. And then the final element is the ability for trend followers to be able to capture momentum in markets, whether markets are rising or falling. So whether we're seeing positive momentum, positive trends in markets, or declining markets. So you take all that together in aggregate, the fact that the approach is so broadly diversified, it's not dependent just on stocks and bonds. It's adaptive in terms of its approach. It follows the trends and is able to capitalize on rising markets as well as falling markets. The hypothesis behind trend following is that it's crowd behavior. It's crowd behavior that actually drives trends in markets. Different participants will react at different speeds to new market information, and it's that cascading effect of different investors taking into account different information, different inputs over different time frames. It's that crowd behavior. It's that herd instinct which we see so often by markets. Market participants are driven more by emotion rather than hard facts, hard scientific data. And it's that emotional response, it's that herd instinct that drives the trends. Looking at our approach in particular, we apply 8 different, what we would call price filters. And when we talk about a price filter, what we're referring to is a statistical approach, statistical analysis of price behavior, which will try to strip out the noise in the markets. All markets have a huge amount of noise, in the price action. The fastest price filter that we'll apply will be looking for momentum over a period of, say, 1 week or longer. Our slowest trend following filter will be looking for trends over a period of around 6 months or longer.